Good morning, everybody. Thanks very much for joining us here. Those who don't know me, my name is Richard Betts, and I'm the publisher of Real Asset Media, and we publish a series of magazines, dailies. I won't spend a lot of time on it, but we publish the Expo Daily News, for example. We have a thing called the International Investors Lounge at Expo Real, which runs its own program. We do a similar thing at MIPIM. And we also work a lot with the industry on initiatives like, for example, the Senior Housing and Healthcare Association. So we have a tendency to work with the industry, and we do cover the news because it's of interest to our global readership. But actually, a lot of what we're doing is these kinds of things and sharing insight, strategy, research, and the sort of things that may be driving the deals and the news of the future. So that's just briefly what we do. Benjamin, let's start with you. It'd be interesting, I think, just to get your sense of the last 12 months, how you're seeing the market, because there have been huge changes and developments.
Yes, my God, it's changed so much over the last 12 months. I will start with the end. The conclusion to me is that we are in a quite stable market in France compared to other regions in the world, and that's good really because of course there will be fluctuations in asset prices. It has to be. I mean, if you see that the French government bond pays roughly 3% for 10 years, why would you invest in a core asset at 2.5 these days? I mean, things will change and we'll have to adapt, but in a manner which is probably smoother than in other areas. So that's quite good. What has changed is, of course, pretty much the rise in interest rates that creates the current cycle that we're in, and we're in a super cyclical market, but it's nothing new. What is really new, to my mind, is the fact that is the ESG topic. The ESG topic is something that, will change our lives, but your lives probably even more, because for the first time you have to deploy money to improve the energy performance of your assets, and you won't necessarily create value by doing that. You will be more protecting the value of your asset. So it's a bit frustrating to put money at work without necessarily generating capital gains, but that's how you will keep your asset liquid over the coming years. Plus, it's so good for the planet that in the end, you know that you're doing something good. So.
Let's pick that up a little bit with you, Jean-Marc, as well. Because we launched Impact, there's copies of it next door, last year at Expo Real, because there was not so much in terms of the media anyway, of a focus on a lot of these drivers for sustainability, for social impact, and you could see those coming through in the industry. What's your sense of that? Because logistics was always viewed as sort of, the ugly one in the family, in a way.
If we have another look on this on the market, it's very interesting. We've got the world of before and the world of now, and I see two steps, and after that I will come back to the sustainability. It's only my point of view. We've got the industrial world before in Europe, before the COVID and the lockdown, and during. We organize the world differently in our mind in Europe, and we see that it's an essential industry for us to be able to offer goods and other industrial manufacturing in Europe, inside of Europe, then in France. And after that, after this summer, it was totally different for the debt and for other things. With a stable market in France, we are really in a stable market. And for the sustainability, for a stable market compared to the UK market and German market, Spanish market is quite good still. And sustainability is not anymore a word; it's a reality. Yesterday, I spoke with you. Yesterday, I was with an industrial company, very heavy industrial, and he was speaking about one thing in 2 hours: decarbonation, sustainability, ESG, and other things. You say, okay, it's totally crazy, but for him it was very, very important. For our company, effectively at this time, you only save the value of your asset today, but for the future, I imagine that we'll have we all imagine two kind of asset, poor asset without any sustainability reflection, and the real market, and it will probably assist to a rental growth. It's sure. It's quite sure. It can be in other way on this, but it's not anymore a word. It's sustainability. It's a real goal for everybody now, for the planet and for us. Not a word.
And Alfred, yeah, pick that up. Yeah.
No, I think what is interesting for me on that, looking at it from both sides, from the one hand side, from the owner developer side, and from the utilizer side. I think 5 or 6 years ago, before the COVID, everybody was already talking about a green lease. What that does mean was simply what does happen if we have to invest into a building to get it once again sustainable, as we say in general terms. And nobody was prepared to do that. The tenant was prepared to pay a high rent upfront, but then saying, well, if there are extra investments to come, we will not co-invest with you into your building. So the word was always on your building and environment. And nowadays, ESG does also mean social and also government. And these two words are very often a little bit forgotten. Everybody is talking about, at least in real estate, very much about environmental things, which are easy to implement, let's say from a lawyer's perspective, if you're constructing a new building. Then you have the framework in which you should operate. You know exactly what the criteria are to get a label or to get something else, and then it's fine. But then you have the buildings here in Paris, the office buildings, or buildings which are in the outskirts, which have not been very well maintained over the last 10, 15, 20 years. What do you do with them? And I think there's nobody talking about environmentals on the environmental side to look into that and say, how should we do that? Can I go to the owner and say, we take 50% off your price and then I make the investment? So to get it once again into the market. So I think that is a tricky one for me. And from a lawyer's perspective is also the comparability. If you have a label, the labels in Paris, we have 2 or 3 around. In Germany, we have different labels. So the comparability between the different buildings on the basis of labels is not always given. So there is no clear identification. You have really to look into each building, to each label with the criteria to drill down to something which is much deeper than that. And my point is simply that it's important to have simply also a look on the S and the G to see what can we do with that. And I think the only way I look at it in one asset class, the hotels, try at least to be also accepted by the people living around. So they have sessions where the people living around the hotel get into the bar at decent prices. It's only the Sunday afternoon where they come with the kids or whatever, but they would like to be more established in the area in which they are operating, and not only for the guests coming in from across the world. So I think there's also a point which I would like to mention, that we have in the environmental side 2 issues: the labels which are not comparable, the old buildings where nobody, perhaps the private equity goes into that once in a while, saying we can make a deal here. And we have effectively the S and the G, which is not properly defined yet, at least from the real estate side, from my perspective.
Okay, good. And obviously, for you, Benjamin, you're looking at being able to do more green financing, encourage sustainability, those sorts of transformations. What are the challenges there for you as a bank? I guess in trying to finance some of these, because for sure you can look around and, you know, I think it's 90% of the buildings that are here are already built. So it's, you know, and that really is where we've got to make that difference.
Yeah, it's so interesting, and there's so much to say. What I would underline is the fact that indeed the S and G aspects are important. By the way, did you know that we have the obligation as a German lender from our authority to determine the ESG rating for each of our borrowers on a specific transaction. So it's not only that we have that policy internally, but the government, in a way, indirectly, wants to see exactly how ESG friendly our clients are. And at this stage, it doesn't have an impact on an economic impact, say, but one can imagine that very quickly it will be the case, and that on top of the credit rating that we have already, which determines the amount of equity that we need to have on a specific loan, there will be also equity which needs to be put aside depending on the ESG profile of our borrowers. Now, in terms of what we're facing in terms of issues, my first issue was to understand how this all works. And I've spent months just doing that this year. And in the end, my point is to say that you have two sets of, norms. You have those of the lenders, which often refinance themselves by issuing green bonds. And since there's no, national or international institution who says this is what a green loan is, etc., each institution defines its own criteria. For us, for instance, for Berlin Hüb, an office building in Paris is green as soon as the energy consumption is less than 140 kilowatt-hour per square meter per annum. So at least I know that with that criteria, I will have a green office building, which I can refinance with a green Pfandbrief. At least there's something clear that I can communicate all around. And the fact that a property has a label is not necessarily a good criteria, because what I would also keep in mind for you investors is that in Paris, where you have only historic buildings, you would think, well, it's impossible to get green. In fact, it is. How? Through two means, which are to be connected to CPCU, which is the urban heating system, which is so much more efficient than individual heating. And it's probably the same for the cool air supply, which is also available over a network here, which is called now Fraîcheur de Paris. It's very poetic. So by doing that, by being connected, you can have an Haussmann type asset, which is green. So it's quite nice. But the challenge is to understand, well, how does this all work? Plus, I didn't mention, you have also a new norm, which is now at a European level, which is taxonomy. And taxonomy enables to know exactly what your property needs to be so that it's considered as green. Just to remember that I think the building industry represents 30% of the emissions of CO2 worldwide. So it's a big part in it.
Absolutely. I wanted to pick up with you, Jean-Marc, just in terms of, obviously Trammell Crow's focus here I know in the States that there's also other sectors, but here at the moment in Europe, it's very much focused on the logistics side. So I suppose, what are you seeing at the moment?
Sorry, on a short term in office.
And in office here in France as well?
Yeah, on a fellow. Yeah.
Ah, okay, all right. Well, let's start with the logistics. Obviously, huge focus on that over the past 2-3 years, including during the pandemic, obviously. What's the situation now? Are you seeing the same levels of demand, both from, I suppose, investors and occupiers? What's the situation here in France?
The most difficult for us is to make forecast with prime yield. We know what is the market now, not in the middle of nowhere, but we don't know the prime yield in 12 months, today, tomorrow, and we don't know. But we are sure about one thing, is that we've got a strong market, and we say we can have two different focus. We are at the end of the industrial and logistic market because a lot of things are doing since 20 years. But on the opposite, you can say that we are at the beginning of, compared to with this new world, beginning of a new way of creating building, of imagine building. And for us, one more time, it's not a war. In US, it's the sustainability and the label is very important. But when you are speaking about office building, refurbishment inside of Paris, or a new building, industrial and other, you've got label. Until now, on my personal point of view, it was only marketing. I need to have this excellent, why excellent and very good. It will be more expensive, only that. But does it give something for the planet? No. Only for the surveyor, and we spend a lot of money for nothing. But now, we are sure about one thing. At the beginning of the imagination of the building, you've got the local authorities, and we are obliged now to discuss. We signed a deal yesterday, and we were with the mayor for an industrial site and logistic, and it was the main point of our discussion. These things. To come back to the market, we are at the beginning of the rental growth. One more time, because when you compare the rental market, French rental market with Spain, Germany, or other country, UK, it's incredible. It's more than double, triple level of rent. Why in France would it be different? Because we've got a lot of tax. I'm not sure that it's the point that we will be obliged to reconnect the market with the international view. It's my point, and we still and we got a scarcity of land too. It's very important. Then, but we've got this scarcity in other country. We are very confident, very on the market. It's not a word one more time, because the company invests since 18 months in Europe. Then we are sure of this.
So you're expecting rental growth here in France? In terms of the logistics side?
Why would it be different? Because everything is more expensive. The construction costs are exploding. You can even in the office market, but for the logistic, you are €1 per €1. It's very important. And how can you rent a building at €40, for example? 40. I said 40, and to create this building, it will cost €600 per square meter to build a building, without soft cost. It's nonsense. Then we are sure of this.
Okay, good. Yeah, go ahead, Alfred. Yeah.
Well, I think it's well taken that greenwashing was certainly something everybody was doing over the last 5 years, but I have the impression, looking at least at the institution. I think it's going.
I think it's going. Yeah.
That's green.
It's green. Yeah.
That was not the reason why I picked it. No, I think it was greenwashing, but nowadays people get more professional about it. You see it already at the institutional funds, where they have the person who is responsible for ESG. I think it's in your company the same, and you have it also in Berlin Hub. So that I think the professionalism which is behind it has increased, and people are also acknowledging it's important. It's not only because our kids are telling us, you're destroying the earth we would like to live on when you are dead. It's simply that we are conscious about the fact that we have to do something, otherwise it will be too late, and we have simply seen also the heat we had in summer and so forth. So we are experiencing things which oblige everybody to have a thought on that. I have only one point I had on my lips when I was listening to you, Benjamin. It was simply, you say the ESG is important for you. You have your own criteria. As I'm working a lot with London office, we have the LMA criteria of sustainability. Do you look at that? That was one of my questions, because it's certainly something comparable. And coming from the UK, it's certainly something you take into consideration. And one bank told me that you are very good on ESG. You get even a discount on the interest. So it might be that you can earn 0.2 or 0. Whatever percentage if you are ESG good or well, perfect, whatever. It's not only the equity you have to bring, but also the interest. Is that true also for Berlin Hub?
Yes, these are all super interesting topics. So the way it works for us is that, I mean, as a borrower, as an investor, you can say that you have subscribed a green loan with Berlin Hub, provided some criteria are met and provided you commit to keep the asset green over the life of the loan. And the question to know if you get a discount on the margin, it works the other way around, bizarrely, which is that if you no longer comply with your commitment, then the margin goes up. There's a very small, like 25 bips or so, margin step up, okay? By the way, it should be quite easy to know that you will stay compliant over the life of the loan, because there's no reason for the energy consumption to rise. Once it's good, it's good. So, and your other question was about LMA. So LMA is one standard, but I couldn't say that it's the one that we use on each loans. I mean, we have our own appendix, which says exactly how the margin evolves, but it's not necessarily LMA more than something else. And it is super complex, really. I think the first thing to do for each individual is to see, well, how does it all work? Just to accept the idea that each institution makes its own job. So it's a normal result that you have different criteria for everyone. But of course you cannot work on that basis. So then you need to see maybe what's the strictest set of criteria in the market, and then use it for yourself. Of course, the fact that a big senior lender, German senior mortgage lender, has one set of criteria, for you is probably something that has value, because at least you know that if you sell your asset, someone like us will be able to finance it. So just as an idea, but I'm not pretending that our criteria are the best.
And what's the situation? I mean, one of the things that's come up a lot in the sessions that we've run, of course, is the situation with values, interest rate changes, who's going to take the pain on that? At some point the values have to change, and then who's in trouble? Is it the MES funds? Is it the equity? Is it the senior lenders? Are we going to see huge pockets of distress coming in when people begin to look to refinance? This is to anybody that really, I mean, what's your sense of that, particularly here in France? I mean, it seems to be a slightly more positive view in the coffee room than it was, for example, in Frankfurt or in London. So it'd be interesting to just, are you expecting to see distress coming into the market here?
I make a first attempt to give you an answer, at least from what I see on my desk. I think it's perhaps the best and the more realistic one I can give. I think personally there's a lot of thought about it. I think the re-evaluation of assets to the year of the end year will certainly be something which will be nicely discussed already in the institutional funds, where they have huge portfolios, and if in one of the portfolios the value goes down 5%, they may have a problem regulatory-wise, because they have leveraged most probably their acquisition costs. So 5% down does mean that the LTV does not hold any longer. So they have at least to inform the bank about it, get into discussions. It might be that they have to increase a little bit the equity, or have an increase in interest rates. It might be that they have to put some equity aside to get a kind of cash reserve for paying the interest. So this kind of discussion is certainly something everybody is expecting to come in if the people were not smart enough already to start the refinancing earlier this year. So trying to do that even if they were not yet at maturity, saying, well, it might be perhaps sensible to start renegotiating our loan if we see what's going on. And the Americans were already front runners for the increase of interest rates, so that people were already saying in March, well, we have another 3 years to go or 2 years to go, but we refinance now because we would like to put an interest rate in our contract which is reasonable. So that you have this kind of two different reactions in the market. Do we see distressed assets? Might be, but I think looking at the huge funds we have here in France, I think they are already doing their math about the different assets they have, and I think they will certainly try to do that, which is not everybody's best guess, but I think they do it behind a closed curtain, starting to discuss their sales a little bit off market with people they know, and they will not have something like a big crash in the market where you can buy with a discount of 20% all assets. I think you must be well connected nowadays in the French market to make a good deal. And if you have still equity on your side by which you can say, well, I don't need financing, we can do the deal tomorrow, then you get perhaps also a discount of 5-10% extra because you can do it for tomorrow. So I think this is a little bit the particularity in the French market, that we have not the big crashes as we have in the UK market. If there's a crisis, they take upfront 20% and try to clean it out within a very short period of time. We are not so, so strong about this. We clean it up quickly. We have this kind of, we know each other, we do deals together, and we try to have it in a smooth manner, not forgetting also that we have a very diversified market, which is not under pressure as everywhere else, where you have perhaps one sector is more predominant in the market than in France. France is a very deep market for office space, and we have not only banks, insurance companies, we have industry, we have all the other areas of the industry, which is all picking up office space. And so far it's a little bit different, and I think there is distrust, but it will not be so openly discussed as it would be in other markets.
And Jean-Marc, are you seeing more opportunities coming through, i.e. less competition when assets are coming up, and more opportunities and more flexibility in terms of the sellers on price?
I totally agree with you. I got the same view of the market. Today, if you've got money, if you have cash, it's easier to discuss. If you are ready to buy it on full equity, small industrial, we are focusing on the industrial market at this time. It's perhaps easier, but easier at the short term, because if you are buying, as a developer, we are buying land to local authorities, then no crash, no rediscussion, no repricing, not really. Several percent, nothing. For industrial sites, several call of tender at this time selling industrial sites. On my point of view, they are too expensive, but no repricing at this time. What will happen? It will be out of the call of tender. It will stop, and they will wait. Or I can imagine 20 or 30% of a discount at this time. I don't see that. I don't really see that. But do we have opportunities on the future? If you are agile and if you got money, yes, I'm quite sure of this. And for the office market, it's quite different. But if we are buying land belongs to old industrial. They don't really have cash problem on an old industrial site. They want to sell it, and they can't make a lot of money compared to a building, to office building inside of Paris, in the first suburb of Paris. But do we have an opportunity in the future? Yes, but not the same compared to discount in other countries.
Okay, good. And Benjamin, in terms of the activity in the market for you, I mean, you know, a lot of the discussion at the other sessions was of the senior lenders, particularly the banks, retrenching.
I think we have to distinguish between a market where prices will go down, which is not an offense because they have gone up so much. I mean, it's natural, cycles. And the second thing, which is distressed situations. And everyone will pay a price, values will go down. Will that lead to distress? In my mind, not necessarily. I take the example of the wall of debt that we mentioned so often in 2010-11, where banks were supposed to have lots of repossess, and in the end we didn't really hear about it. That was treated peu à peu in an extend and pretend policy, which in the end worked quite well. To me, the question for you is really to know if your asset is performing from an economic standpoint or not. If it's performing, i.e. if you have tenants, if it's occupied by at least, say, 80%, then we will find a solution with regards to the financials, financial aspects. If there's a poor performance, then it will be really difficult. Do we see that? In fact, we've always seen a very limited number of assets in the market which were not good enough, mostly because of the location. And at some point, when the market was weak, well, it created accidents. And is the situation different today? I would say it's just the same. So pay attention to the performance of your asset, make the necessary capex so that tenants like it, and then things should go well.
Okay, good. And just in terms of activity in the market, are you lending into the market, and if so, on what? You know, is it residential? Is it logistics with Jean-Marc? Is it office? You know, what are you lending and what are you not lending on?
Well, the point is that we need to earn our lives. We need to generate profits like any company, like you do as investors. So we need to be creative a bit because we remain a senior lender. So we need to find exactly the opportunities which enable to optimize everything. That made us go to transactions quite new to us, like, for instance, financing the development of managed residential assets, like a big one in La Défense that we are financing currently. So we see the risk as very remote, and because it's not such a deep market, then we can charge a better margin because the service that we're offering is higher. So yes, we're adapting, but in the end, it's exactly the same way to underwrite loans these days as a year ago. So the method is not different. We still are super open for creating new relationships with new clients on good assets, and the discussions will be professional discussions on the property really and how it's managed.
Okay, good. Jean-Marc, I know you've got to go, probably about now, if I can see the time. But I just wanted to pick up from you in terms of the trends that you've got for 2023. Where do you see those? What's the key trend for you, and where do you see the market heading?
The market for logistics. Still strong. Really, it's. I'm very confident on this. We've got a short period which is difficult, but we don't have any asset to sell now. Then we are confident with this. We are buying some asset and developing, and when you see the lengths in France to obtain authorization and planning authorization. We are confident. Then, but I would like to we are speaking about distress assets. We've got other assets. We've got a CBD. We've got first suburb of Paris for office, for example. And after that, you've got a lot of buildings in the middle of nowhere. And until now, we said we can make residential, or we can make for students something for students, and for other goods, for other activities. And we have to think about it. This kind of building are opportunities for us, but to make what? And for the future, I was speaking about office. Trammell Crow is very strong, in a very strong position in America for life science. And life science is very important for us. But at the moment, life science in Europe is in the middle of nowhere. We don't know what I was speaking about. Every old office building can be refurbished in life science, but is there any demand? We don't really know on this. It's a focus for us, but I don't know at this time what will happen on this market. Then we are, for us, we are beginning to buy some lands, to buy some industrial site. Then the future, we are quite confident.
Okay, great. And I mean, a big focus actually that we've seen on life sciences, particularly as part of those alternatives, as well as kind of senior housing, healthcare, but life sciences has been a big topic, especially with those moving into the cities as well, into Canary Wharf in London, for example. So huge changes expected there, and advanced manufacturing, those kinds of topics that have previously not really been real estate topics. But now everybody's beginning to look at those and see opportunities there, which is interesting. If you have to go in order to make secret deals at CIMI, then Jean-Marc do.
Thank you very much.
Thank you. There's kind of 10 minutes left, and I wanted to pick up a little bit on the capital and any questions that you've got. So, Guillaume, are you happy to just swap briefly there, and I'm going to pick up some capital ones with you as well. And Jean-Marc, thank you very much.
Thank you.
Excellent, thank you. And I will catch up with you at CIMI afterwards.
It's like for the World Cup, I'm the replacement.
Exactly, yeah. The 10 minutes to go. I wanted to pick up a bit on capital flows, because certainly in Singapore there was a big focus in terms of the Asian capital saying, yep, we like Europe. Actually, there's a lot to do at the moment in Asia, so we're just going to sit for a little while. But by sitting for a little while, they were talking more about 5-6 months, mid 2023, coming back into the market. So it'd be interesting just to get your senses, and maybe let's start with you, Guillaume, on the capital side and what you're seeing.
Well, as you know, in Paris, I would say 60-65% of the market is driven by French investors. So I would say they're still really active in the market. But I would say there's still the usual, Paris is a dip place, France is a dip place as well, so there's still I would say, usual suspects. So the funds based out of London, the Middle Eastern still very active. Obviously, we have not seen a lot of Asian capital coming in due to the, I would say, current situation in China notably. So I would say it's stable, less activity, less deals for sure, as, for the obvious reason the panel has mentioned a couple of minutes ago. But still very stable. The French are there, still international capital. So just a drop in activity due to, I would say, more uncertainty in the market. That's all. So.
And Alfred and Benjamin, what are you seeing coming over your desks in terms of the capital? Is it mainly French domestic capital? Is it German institutional capital? Who's in the market and who's out at the moment?
I have currently a little bit, looking at my desk, as you say, very individual view on that. I think we have accompanied a number of debt funds coming out of the US, which were set up by the big insurance companies, for example, who found the way into France via London, Luxembourg, and then into France. And I think Trammell Crow is one, we have financed with one of these funds very recently. So that's something where the newcomers from the US into the French market as developers are financed by the Americans, whom they know already from their home country. So there's a kind of a perfect link for between them, that they say, we knew that you from the US, we would like you to finance also our assets in France if you start to develop. Because development finance is not as easy to get nowadays from the banks, to be very frank. The construction risk and also the, let's say, the increase of costs for a construction which is taking longer than a year is something everybody has a little bit difficulties to get their arms around. So therefore I think the development costs is something which is difficult to finance, and there's more private equity which are only saying we get 8% or 10% on that and not 3 or 4 is prepared to take that risk. So you must be simply realistic about it. Then the other side is also the ultra high net worth individuals we see very often coming in, who are prepared nowadays to put equity in 200, 300 million euros on an asset. And they say they are driven by inflation. They say we have money on the bank account, or we have just disposed of our enterprise, we have this and that, and we park the money for the next 2 or 3 years, 1/3 in real estate, 1/3 somewhere else, or 1/3 in something else. But real estate is always one of the pockets in which they put their money, saying if we lose via inflation 5 or 10% this year, I put it into real estate, there at least I stabilize my revenues, my investment or the money I have, and maybe I get something uplift afterwards. So that are two important, I'd say, capital providers which are disproportionate on my desk nowadays in comparison to the banks or the private equities houses who were before predominantly on my desk. So that's something which is new.
Okay, good. Better, yeah, feel free to.
I would say that what is pretty slow these days is the investment market for core assets, because I mean, the repricing has not really taken place yet, which is normal. Someone has to shoot first at a discounted price, and that one will be seen as the bad pupil in the classroom. We have a lot of discussions, and we also make loans to more added value, opportunistic players who simply can place offers at bad prices to sellers who have to sell in a way and who have the plan to redevelop and create a beautiful green property. That works well. And bizarrely enough, I mean, we are a core lender, but we see these days that construction loans don't work that bad from a, say, rating standpoint. So we take the opportunity and do that. But certainly those who are the most reactive, i.e. the value-add players, like some private equity funds, very dynamic, they are those who today look at opportunities, ask us to issue terms, clearly.
Okay, good. And Guillaume, you're looking at different jurisdictions, Germany, France. How are you seeing, I suppose, that comparison between, investors looking at the different markets in Europe?
Well, I think we're in a very good position here in Paris because the market is, less investment for sure, but less products. But I think it's more is to come, as you were mentioning, behind the curtain, because no one wants to be in the middle of the arena in a bloodbath with a tender offer going completely rogue, obviously. But compared to I would say Spain or Italy, and I was not completely sharing the point of my colleague before that on Spain. There's a lot of floating rates over there, and I think that there, where I would say in most countries, not mentioning London or the UK, but there's been this kind of period where I would say core plus and I would say core plus have been doing the market, and in Spain and Italy, we're more in a market where the opportunistic or the true value add did their job by buying NPL portfolios from institutions that didn't have, I would say, time to manage properly their assets. And I would say the core plus people didn't really do their shopping. So you're in a situation where obviously those big guys based out of the US or London are most of them have been going into this portfolio thanks to the debt fund you were mentioning. And the debt fund is good because you can go maybe higher in the ratio, but at the end of the day, it's not a partner as a bank. A bank is a partner to, I would say, produce new buildings and to help you. It's not just an accessory to your real estate investment. A debt fund is looking for a business plan to execute. So at the end of the day, if they can get the keys, they will do it because they can do it. and potentially, I'm not saying they are, I would say, dreaming about it, but most of them are taking a really good care in what you're doing, and the bank is here to help. So it's a main difference. So we see a main difference where I think more products are coming in Spain and Italy with, I would say, not a display distress tag, but when you're calling those guys, you tend to hear that they're more tense than some of the players here, that it's end of a fund, they need to get the value out, etc. But I think this is where the difference is, where I would say the market here, I would say, is more sane versus potentially other southern countries where I would say the heat is to come in the next quarter. And Germany is still is still looking for I would say getting out of the safe haven denial, because I think in the tier 2 cities it's starting to shake a little bit, where when you were looking at tier 2, even tier 3 cities where you have like strong German industries and cities you've never heard of, and when you were looking at a core asset, it was 4% or below 4, and now some investment memos are turning around at 5 plus, where 3 quarters ago you wouldn't imagine anything like this would be possible. So it's a bit changing. Sorry, Thorsten, for this, but in Germany as well, because at Expo we had that feeling where we were discussing everyone was feeling that the market was turning, that we need to get our hands dirty to get the value back on the assets, and I would say most of the German people I was talking to were like, no, this is happening to France because you're bad managers. This is happening to Italy because you're bad manager as well. The UK has done crazy things thanks to the debt fund money that was kind of pulling in, but in Germany we're safe and sound. And out of the 5-7 top cities in Germany, I think it's beginning to change, and I think it's just a way also to adapt to the new trends.
Okay, good. And very briefly, market here in France, mainly looked at as Paris. And particularly, there's the Olympics coming. There's Grand Paris. There's all of these things happening. Is the focus going to be really mainly on Paris in 2023, or is it also still going to be, a focus on the more regional markets?
Yeah, on that one, clearly the COVID has changed a lot of things. I think from my discussions with young people or my age or even older, people now have come to a new standard, which is 3-4 days a week at the office, 1-2 days at home, and that changes so much. The need really to be at home to do your job has disappeared, and it works. Of course, in terms of brainstorming, it's much better to be at the same place. But if you're there 2-3 days a week, it works really. So the consequence of that is that, having a place to meet is of course important, but less than before. And you will want to go to a place which is really nice, i.e. which is super central. To me, that's the main thing. So I think Paris will be the big winner. It's so easy to live 2 hours TGV away from Paris and work there 2-3 days a week. I don't see, of course regions are growing by nature because the population is increasing, and because when you see cities like Bordeaux or Nantes, they have really established CBDs. Office areas. It's quite impressive. These are usually good properties that I personally like, but the markets are not that deep in the end. And I think we should not speculate too much about. France remains a centralized country. That's the way it is.
No, I think I fully agree with that. The only difference I see is that there's now coming a kind of a new demand also in the regions. Because what you say, the people are perhaps taking their domicile no longer with the family in Paris, because the family might be somewhere where the sun is shining, or in the mountains, or somewhere over there. and they come in for 2, 3, or 4 days into Paris. That does mean they may have given up their apartment in Paris. They're only looking for one person for 3 nights or something like that. So it which creates a different demand in the Parisian market already. And on the other side, if they are working 2 or 3 days in Annecy, for example, well, if the other workers at home, they would like perhaps to get together somewhere and not sitting on their own at home. Perhaps also there's no space because they have 3 kids and they have not the space at home. So this kind of rework in the smaller cities is certainly also an area which is interesting, because then these workers from home look for an office where they can meet other people doing the same thing they do. So I think that creates a little bit of kind of an area which is interesting. I see it with the products hotel operators are offering nowadays. So it's not that we have WeWork coming in into Toulouse or somewhere to set up effectively a new office or buying an office space, but the hotels are adamant, if they have, how to say it, low occupancy, to be able to say 3 or 4 or 5 rooms are earmarked eventually for co-working in our hotel space. And that's something which I have seen, at least in the hotel area, where new demands are created by this swing of people are not so often in the office anymore in Paris, but being up abroad, outside Paris, sorry, in the region. So that's something where I would simply say we have to see how that, let's say, relates to new developments in the regions which are different, which were not anticipated before.
It's interesting to me. There are 2 things: the fact that colleagues from the same company have to meet at some point, and if the company is active all over France, this creates a need to meet in secondary cities in the regions. But is that something new? I'm not too sure. I think it's always existed. So there's a need for places to meet. Is there a need now for a place to work, which is not your home, which will make new office developments interesting and required for these people? I'm not that sure. If it's just to have the ambience of being on a floor plate in an office building, if it's for your own purpose, I think you will stay home, frankly. So it's a big question. Is there a need for new office buildings in the regions? Because people are fed up with staying home, they need some question mark to me.
Okay, good. Does anyone have a question that they want to ask? If so, I'm going to scan the room briefly, and if I get to the end of the sentence and nobody has, then I will ask my last question to everybody, which I'm going to do now, which is, we've talked a lot about challenges, what's happening in the market, but it would be good just finish on, I suppose, key trends and opportunities. So let's start with you, Alfred. So biggest trend that you're expecting to see for 2023, and what does that mean in terms of opportunities?
I think what is at least anticipated, there are not a lot of new developments starting nowadays. So I think there's and you see that the rent in office space in Paris, in Intramuros, we here in the office, we rented it nearly 9 years ago. We are about half of what's now demanded for the same building in the same region. So we have rent for offices which has gone up above 1,000 euros per square meter. So that's something which is mind-boggling and shows simply that there's a kind of a lack of products of office space, which is really A, on the level people are looking for, B, well placed, C, something people would like to take. So that creates only this pressure on the rent, and we have to move out here or keep it. So we are looking really into the area, and we see even in the 10th or 9th or 11th arrondissement, the prices are at above 900 euros a square meter. So that I will do so. We will have a coffee afterwards. Yeah. So I think that's something where I would say the trend is certainly office space, and there's also a lot of things which will happen in that area, even if it's plain vanilla. Everybody would say it's nothing very special into that, but I think that will certainly happen. The last mile is certainly something which is a big issue. I experienced it very recently when I tried to buy a scanner for me personally. I went to Boulanger, which is one of the big retailers. I said, I would like to have this scanner. Well, 3 weeks. I said, wait a minute, 3 weeks? No, I would like to take it. No way. Then I went to the next shop, and it was on the Champs-Élysées. I said, by myself, they must have the scanner on stock. No way, they don't have it. And they could bring it in within 2 days. So that's something where I simply see the last mile is certainly an issue which has not yet been fully sorted out. Otherwise, they would not have this long delivery times to get a very simple scanner. That's one thing to me. So I think that's certainly something which has to be developed much more than before. And that are the two trends I see on my desk, as I do, as you know, I do a little bit of hotels. That's something which has kept us busy the entire year. Hotel transactions, buying, selling, refinancing, refurbishing. That's something where the hospitality industry is simply very strong, came back very strongly. So that is the only industry, from my perspective, which is making a V and not an L. So insofar, I think that was something what I saw. And I think from what I'm hearing, it's still strong that the hotel, certainly also the luxurious class, is going very strong.
Okay, good. Guillaume.
Yeah, obviously, I'm sharing Alfred's view, but I don't really like to be binary. But it's, it's not always black and white. But I would say that more and more it's even more black and white. So you have the big winners and the big losers. So what we see in real estate is exactly what we see in real life. So the rich getting richer and the poor getting poorer. So it's exactly the same. So CBD. Paris CBD, the values are getting up the roof, the rents are getting up the roof, everything is, is even costing more. And on the other side, the retail is the same. You have the high end, the, Bond Street, Avenue Montaigne, Fifth Avenue and everything, the prices have gone up, massive, it's incredible. On the other side, you have the retail parks. And where we had some kind of continuity for office, it was the suburbs. For retail, it was the Galeries Commerciales or the commercial centers, or the kind of suburban malls, or even for logistics, it's kind of the same. So you have the winners and the losers, and we're kind of losing everything that was in the middle. So basically, for example, when I'm looking at stuff for investors, whatever the strategy is, now it's it has to be perfect, as Benjamin mentioned, because if it's not perfect in terms of location, you won't have any tenants, you won't have any banks, you won't have any partners. So it's interesting to see that everyone is following the same way to do even better for the good, and is getting worse for the bad. So basically, when you look at I think it was Jean-Marc, Jean-Marc, he was notably quoting what's happening to the suburban assets and 20 to 30 kilometers away from Paris. Honestly, companies with, I would say, a bad investment profile are in there with short-term WOLB. No one is really doing OPEX or CAPEX in it. The banks are trying to get away because they feel that at the end of the day, it's going to be a shaky situation. City Hall, when you're going to them and saying, well, it's not going to happen in office in the next 2-3 years. We need to convert this into resi, senior housing, medicalized housing, whatever. No. Why no? Well, because if I do this, you will, especially resi or I would say alternative use, I will need to provide you with some more public kind of transportation, etc., and I don't want to pay for that. So it's getting into some kind of vicious circle where I would say central location and the good is getting better, and I would say remote or tier 2 is getting even worse. And everything is the middle. For the lucky one, you're going up, and I would say most of the rest is going down. And it's I would say this is what I'm currently experiencing for office in Paris, even in the regions, the retail indeed, logistic a little bit less because the location is more linked to the hubs and connection, etc. So maybe it might be a difference. Hotel is the same, ultra luxury versus discount, and this is the strategy is like both ends. It's the middle is just getting away. which is kind of, I would say, scary, because I would say a lot of locations, a lot of geographies are being completely abandoned. And also some strategies we used to do back in the days, you know, going into a building, shaking a little bit the rent roll, doing a little bit of OPEX or CAPEX, and then sending it back. Now it's impossible. Either you do a perfect building and, you know, Benjamin looks at it and say, oh yeah, I can have a green bond, and, you know, I believe you can have the top tenants, etc. Or if I go to Benjamin buying a crappy building, and I have nothing against suburban Paris, but into Vélizy, and saying I'm just going to do, I'm going to take a brush with a friend and we're going to paint it, cosmetically reshape the lobby. He's going to look at me saying, no, you're going to have a call center for maybe a 3-year term max. The guarantees are going to be close to zero. No, I'm not putting any of the bank money in there. So this is, I would say, a situation where it's, you know, either you do discount and you try to find your way out of it, and it can work. Retail parks is a good example, for example. Discount hotel is a good example as well. Or, I would say, you punch with the crowd and you try to do the even best building in the top location, and you get a beautiful tenant. But it's
real bifurcation in the market. Yeah.
On my side, I would say, with the exception of retail, I think all asset classes are good to go. Why retail? Because we hear a lot that the crisis has lasted for so long that now we know exactly where we're going. I'm not convinced about that, seeing the number of empty units everywhere, even in Paris, in the best places. So retail, I don't know. But for the rest, what's good is that we know what to put in our business models, in our cash flow models these days. We know that there's a cost for ESG, and ESG must be done not halfway, but seriously. We know what to make in terms of assumptions with interest rates. So the same rules as earlier apply. Maybe the biggest challenge today is that the market is bearish. So we have to convince our big fat cats up there to deploy money to make transactions, and it's in theory I would say it's doable, because you can put forward a business plan. Ideally, you need to be a long-termist. You cannot go too short-term, but then it's not a bad moment to invest. And at least, you know what to do. I mean, there is a form of clarity in the market. You know what to do. So it's better than a year ago, where in terms of construction costs, for instance, everyone thought, well, it will increase to the sky. No, now we have a view on the construction costs, and they are even declining a bit. So, yeah.
Okay.
Any kind of asset,
okay,
except retail.
Okay.
For me.
Any kind of asset. Excellent. Okay, I look forward to that. Lots of interesting topics there, I think. Really good to get a sense of how the French market is viewing itself, as well as some of those much bigger, broader trends that are kind of influencing the whole of the market across Europe and indeed globally as well. Thanks very much for sharing your views. Thanks very much for joining us here. If you're watching this on demand, thank you very much for watching. All I can say is thanks very much for joining us, and thank you for sharing your views. Thanks very much, everyone.